Good morning, traders and investors. Thank you for tuning in on this Wednesday, April 23rd, 2025. It's a nice, shiny day here in Detroit. I hope wherever you are, you're also having a lovely start to your morning. Stocks higher, much higher here this morning as U.S. President Donald Trump providing a much deserved bump to the stock market. We're going to get some updates on trade talks overnight and from yesterday. We're also going to talk about Trump saying that he never intended to fire Jay Powell. Gold, we're going to talk a little gold. Christian saying it was a big tell yesterday morning. Of course, we're going to get into earnings. We had Tesla last night. We had Boeing. We had AT&T. We had Vertiv and GE Vernova. We got earnings coming down the pipeline later today and tomorrow. Some big negative news, unfortunately, out of Bristol Myers. Also going to talk a little Aklo and some of the trades that the guys made yesterday. Our guest at 8:35 a.m. Eastern Time, Sahak Manuelian. He is Managing Director of Global Equity Trading at Wedbush. Folks, let's get it going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, how is your morning, sir?
I'm on mute. There we go. Good morning.
There he is.
Good morning. Happy Wednesday, hump day.
Yay.
And very nice moves and all kinds of moves. We got a lot of stuff to go over this morning. I'm going to just break it down really quick with what commodities are doing this morning. Crude is up about 0.6 of a percentage point this morning, but off the session highs. Let's go over to nat gas futures. They are down 10 basis points. Not a big move there this morning. Copper futures this morning are up 1.6%. Really nice move over the last week or so in copper futures, and especially off the recent lows. Let's go over to what bonds are doing this morning. That's a big move this morning. 1.5%. Just crazy when you think risk on. This morning is mostly what we're seeing, and bonds are up 1.5%. So topsy-turvy type market with some of these moves. I want to look at Bitcoin here for a minute too. Bitcoin futures extending gains, but off the highs. So nice move here, up over 3%. I thought that was very interesting yesterday to see Bitcoin move. Was kind of give us a risk-off signal. A risk-on signal this morning. I'm going to get confused with some of these market moves, but here you go. Gold is down 1.5%. Could it be a blow-off top that we saw in gold? I don't know. Too early to maybe call that, but I think from just a day-to-day signal, I thought that was a really big reversal that we saw in gold futures, which were up decently yesterday. And as we were going through the pre-market session yesterday, gold went from green to just about red yesterday, giving back another 1.5% this morning. Silver is up 1.2% this morning. Let's get back over to equity futures. And before I go to equity futures, I just want to cover what international markets are doing too, because I think that is important. The Hang Seng was up 2.4% last night. Cool. The Shanghai was flat. The Nikkei was up 1.9%. European stocks all in the green this morning. You got European stocks up 2.3%. Let's get over to those equity futures right now, which pushing into the 20-day moving average, up 2.2% right now. And I think, we'll talk more technicals, but I think could we break through that high from 4.9? We're not there yet, but I think that'll be something to watch. NASDAQ futures, which also I would be watching that candle from the 9th of April. You got NASDAQ futures up 2.8%. And then finally, Russell futures. You have Russell futures up 2.2%. And look at Russell futures are right into that area that, so again, watch these levels from April 9th. And that's right where IWM Russell futures are this morning. Good morning, guys. Dennis, what say you?
Wow. That's what I have to say is just wow last night.
Triple D.
move last night was nothing short of incredible. I had just started eating my supper. So I was like at my desk and I just got the nice plate of food there. And I'm like, okay, this is going to be good. Some chicken, potatoes my wife had made. I was like, this is going to be great. So I just take one bite. And then I look up at my screen and the futures are just blasting off. I drop my fork, leave my dinner over there. I'm like, oh my gosh, what did he say? And I just started trying to lift offers as quickly as I could because the S&P futures are blasting off. And I'm like, holy, I'm in shock. But it wasn't the S&P futures blasting off because it happened at 520. It was the SPY blasting off. S&P futures were actually closed when he started talking. So the two things he was saying, and this was the statement. Like there was a lot of things he said there. He talked about, China, tariffs are going to be much lower. He talked about, deals coming, lots of things. But the thing that really blasted off the market was he said, I never intended to fire Jay Powell. That was fake news. That was the statement that everybody was worried about 2 days ago. It's like, oh my gosh, he's going to dismantle the Fed. He's going to go over his authority, trying to find a way. The whole loser comment, we know. He dismissed and he got rid of all of that. He got rid of all of those concerns, obviously just in one, and just like that, boom, in one statement. So that is why the market is up as much as it is, because there was some serious concerns that he could potentially fire Jay Powell, and that would have added so much more uncertainty. So he put that to rest. The other thing is obviously, with Basson talking yesterday and and obviously Trump talking up the markets, is I really believe when the markets were down there on Monday, and obviously, we were down fairly substantially. Maybe I'm losing track of days. Yeah, it was Monday. I think they had a closed door meeting and said, look, we can't keep tanking the markets here again. We need to talk up these markets because when Trump was talking last night, it was like everything the market wanted to hear. Don't talk about, tell them you're not firing Powell. Tell them, we got deals coming. Tell them, China tariffs. China tariffs going to be much lower. He said everything the market wanted to hear. Everything. That was intentional, folks. So people who say there is no Trump put don't know what they're talking about anymore. The Trump put fully exists now. We didn't know if it existed a few weeks ago. We know now. We have new information, and that Trump put now fully exists. He is going to talk up the market when the market tanks. That is comforting for the market as well. So those are your reasons that the market is higher. Should we be up 110 points on that? I was challenging it, thinking about it overnight. I'm like, maybe because, we were worried about him potentially firing Powell. That was a main reason why we dropped, 100 points on Monday. So selling off, coming back, getting those losses back because he dismisses, that worry. I think that's a good thing.
Well, how dare you go and try to get something to eat? You can't eat in this market. What are you thinking?
No, exactly. You just got to starve yourself until after 8 o'clock when the equities close. But I mean, that was an incredible move there last night. Just the volatility was incredible, especially with S&P futures closed. Like if he drops that at 6, it probably the futures, are like going. But with the S&P futures closed when he dropped all that news, SPY's trying to figure it out on its own without futures traders. That arbitrage mechanism obviously isn't there between SPY and the futures and the stocks because it doesn't reopen till 6. So, I mean, that's, always when you get a news dump between 5 and 6, you can see, a lot of inefficiencies.
So a question for you is this, well, number one, like I thought that that was interesting too, because it wasn't like a press conference on any of what, the subjects that you just mentioned and some of the big headlines. It was just a conference yesterday that I think they were swearing in like an SEC, someone from the SEC or something like that. So I mean, it's important to kind of keep. Yeah, it's important to keep your eye on like what Trump's schedule is, because all of this usually comes out in like the Q&A, and it's almost like whoever's providing these questions, like this was the story on the way down too. Like a lot of times like Trump would be doing something, whatever, like conference of he could be signing some other like executive order, and all of a sudden like the Q&A happens, and if you rewind back a couple months ago, it was like all of a sudden, like the press started answering, hey, what, tariffs, like, what do you think on tariffs? And like that would ignite like a firestorm in terms of, the price action. So yesterday it was kind of the same thing. I mean, the subject matter is not that, but once you get to the Q&A, it's almost like, like a Fed meeting where
Yeah.
the Q&A is sometimes, the press conference is more interesting than the actual, initial,
Yeah.
comments from. So I find that interesting. But my question is this another rally? Is this another rip to fade, Mr. Dennis?
I mean, that's a great question. I mean, it's worked all year. So buying the dips and selling the rips have worked all year. I mean, this is, one of the reasons why when we were down on Monday, I'm like, well, I can't just get all bearish here either. I kept saying, I think there's going to be some deals. I think there's going to be that potential. I didn't know he was going to come out and say the Powell thing, but I did think that there was a potential for deals. And that's why I was like, I kept reiterating. I was like, I can't get super bearish here. I mean, we've had a couple, bears. Joel was pretty bearish, obviously, as well. And I'm like, I just can't get on that bear train here because one, I think the Trump put exists from, the previous, days that we were talking about it. Obviously when he kicked the 90 days, tariffs down the road, that showed me it exists. And then two is there was 118 countries they said talking. So that potential for deals was there. So I think we're still in this buy the dip, sell the rip market until further notice. Meaning, when you get these 120, 150 point pops, it's probably prudent to take some money off the table. When you get a sell-off of 200 S&P points in 2 days, it's probably prudent to be doing a little bit of dip buying. I think we will settle in eventually, but I mean, this is a trader's paradise here, Christian. I mean, if you're sitting on, and you just think about, some of those purchases that I made, a while ago, buying NVIDIA at 88, I flip out of some of it at 106. Well, it's back down at 96. I'm like, well, why didn't I flip out of it all? Now it's back up here at 104. So, I mean, you're being rewarded for selling the rip and buying the dip. That's totally what 2015 has been, or 2025 has been all about. So I think we continue to do that playbook.
I know we've got a lot to go over this morning, but I just want to reiterate your point too. And like, I don't think one of the best things I think that you could do in this market is just stay very nimble. Try not to, try to be objective with the new information that you're getting because it changes on a day-to-day basis. Like you could be 100% bearish one day and you could be right. You could be 100% bullish one day and you could be right. But if you stay in any of these categories, you're going to get hurt. And, so I just wanted to reiterate that. Brent, do we have a small stock that reported last night that's also causing waves?
Absolutely. And while we're still at it, I just wanted to throw out Trump's schedule for today. Yesterday we could have known that he was going to be doing the swearing in. We did know this. There's a website that we've been using. It's called rollcall.com where they have Trump's schedule. And I'm looking at it right now. Thanks for just sharing that, Christian. Trump's going to be receiving his intelligence briefing this morning in the Oval Office at 11 a.m. I don't think there will be any cameras on him there. But at 5 p.m., he's going to be signing an executive order in the Oval Office. And, same as yesterday, there's probably a chance he could say something. So just keep that in mind. Now, jumping over to the earnings front, we do have a few earnings to go over, but let's start with the big one. Of course, Tesla last night reported their results. And importantly, the conference call started at around 5:35 or 5:36 p.m. or so. Literally one of the first things that Elon Musk said is he, gave some indication for his timeline with Doge. And Tesla started ripping right away. Dennis, you were trading it right as it was happening. I mean, what did you think of the results? What did you think of some of the commentary on the conference call?
Well, we knew, and I had set up in the STN room 2 scenarios. I said, if he says that Tesla, that his work at Doge is getting, close to being done and he's getting ready to get back to Tesla full time, the stock's going to pop off on that. I also said, I was worried about, possible delays in robotaxi, possible delays in the new lower cost model. Wasn't really, addressed too much. It doesn't look like there's delays because it kind of said like robotaxi. Sounds like they're going to start producing at scale in 2026. So they ease those concerns as well. So, I mean, Musk said everything that the market wanted to hear. As much as Trump said everything that the market wanted to hear, Musk did the exact same thing. Said everything the market wanted to hear. The results themselves were a disaster. They weren't good at all. Margins are shrinking. Stock was down initially there, but we talked about this scenario. Like if it had any dip, it was probably going to get bought because This stock is not pricing on, where it's a car company right now. It's pricing on all these future prospects there. What they really wanted to hear is that his time at Doge is almost over, and then the market got that, and that is why the stock is up 7% this morning.
Yep.
Yeah, I mean, so this is one of those where it could confuse everybody if you're not used to how understanding how earnings work. It was very interesting, the discussion that they were having on CNBC Fast Money yesterday, where they were kind of going around and sharing different viewpoints. But you always have to remember how prices react to some of these earnings reports. Specifically, it's not so much about what has happened when you're getting those earnings reports and those numbers. When we're right in the middle of earnings season right now, it's not so much about what happened in the last quarter. That is past information. What you really want to hear about, and so people will get this wrong all the time. They'll look at the numbers and say, I don't understand, this stock is doing this, and this is what their earnings results were. Well, it's really more about what the company is going to say, what the future is, what they say in the guidance, what's the tone of the conference call. It's more about what the road ahead. And I think that confuses so many people, because they're like, oh, I don't understand, the results were not, people were talking about how bad the results were, and the stock didn't go down, right? Because all of that is priced into the stock. The stock has already gone down decently. So I think everybody knew, and we were talking about that too. Like, the results were not going to be good. Like, I think 9 out of 10 people probably, had that feeling. It's all about what they were going to say. What did you think in terms of, like, so he said that he's going to be leaving, but he kind of gave like a partial, I'm going to be stepping back a little bit. Like, I didn't think he gave the full, green light to say, hey, I'm going on this date, but he did say he's going to be stepping back to some extent.
I think the algos just focus on that. Maybe like the algos never, you always say the devil's in the details. The algos never look at the details. They're headline driven, and they just hear stepping back, and those are the words they wanted to hear, and blast off central there. So I think it's more, on that. I forget the other point I was going to make on Tesla, but I think you're right with just saying, it's all about my kids. That's why I'm goodbye to them. They're going to the bus. I think, again, you're exactly right with all about expectations. And just to expand on that point, this is what you were saying, how, people look at the earnings and they're like, well, why is the stock trading up? The earnings weren't any good. It has always been, not just in this market, but in all markets, always been about future expectations. What are they saying? Guidance trumps all, we always talk about. But this is why, when I'm doing my analysis, I don't look at backwards. I don't look at, old trailing PE. I look at forward PE, where the guidance is from the analysts. And people say, well, you can't use those numbers because those numbers aren't real. They're projections. But those projections, folks, are done by analysts who are very in tune with the company. So those projections are put together by a number of analysts. And I mean, this is why, I bought NVIDIA in 2024 at the beginning of it, why it was part of my Nassau trade. It was because I was looking at future PE. Because if you were looking at trailing PE on NVIDIA in 2024, you're saying 130 times earnings, you can't pay that, you're an idiot. Well, no, it was trading 25 times forward earnings for 2026 at that time. And I'm like, and the growth potential was just there. And now you look at NVIDIA trading 38 times earnings, and you're like, well, what did I miss? Well, you missed because you weren't using those earnings projections there, those analyst estimates. Yeah. And again, they are estimates. So, I get it, that some people are like, I can't look at that stuff because it's just an estimate, but the estimates are so much better than looking at the trailing PE. So again, just, just some food for thought there. Stop, for a minute just to educate on why I use forward PE instead of trailing PE in my analysis on, like, looking at companies, trading and where they're trading.
And also, look at the technicals here. I mean, I designed a trade yesterday. We talked about this in the STN room yesterday, and I had mentioned, like, hey, resistance is at 256. We talked about different ways. We talked about how the options were expensive. I talked about how I thought a call spread was a bit expensive. What I ended up doing was doing a call fly, because it's the cheapest way to kind of get exposure. But I mean, we're right up to, so some of these moves, I know that, we're headline driven and so forth, but the technicals are giving you some really good signals about how to design a trade. The trade that I went with yesterday was this week's 250, 255, 260 call spread. Call fly. So this is a butterfly trade, and I chose the middle strike, very close to the top of the value area. So resistance to 256. So I should have, now time value is going to work a little bit against me, but I put this trade on for 37 cents. Again, it's the call. It was the call butterfly 250, 255, 260. So this should pay out for me pretty nice, depending on if we could just stay here and not go
Nice.
above, majorly above 250, so not get above 260, not really go below 250, and I should have a nice winner on my hands. Just using the technicals and understanding where there's resistance.
Nice.
Let's keep the earnings train rolling here. We're going to review one more, and then we'll get into a couple previews for tonight and tomorrow. Boeing also reporting here this morning. They reported an adjusted loss of 49 cents per share. Analysts were looking for a much larger loss there, $1.27. Sales also beating 19.5 billion. Analysts were around 19.4 billion. I just checked the Boeing press release, which was out about an hour ago. Didn't see any guidance in there. So Boeing, I'm not sure if they normally give guidance. I don't think they normally give guidance. But did you get any action in Boeing? Were you watching this one, Dennis?
Yeah, I mean, I traded it a little bit. I actually was long and ahead of the report, and then I traded up last night on everything. And I'm like, well, there's no point taking this through the report when it's already trading up substantially, ahead of the position, obviously benefiting from the big pop and everything last night. Anything you were long last night, you were making money with. But I didn't trade it after the report here. Boeing, I think, is also a case where there's just so much bad news priced in. We talked about this as well, where if they say anything okay, and this is what it's, we can go back to this conversation that Christian was just bringing up. It's all about expectations, but it's also all about the bar. And I mean, certain companies, when they're sitting down here near 52-week lows and just been washed out, when you get pops like this, the bar is so low. Reporting on the best day possible here, Boeing again. So I mean, that's why the stock is up 5%. Now, I mean, this has been a stock that's been a good sell to rip candidate too. You do have overhead supply 175 to 180 coming in play, so it's hard to chase them here. I'm probably not chasing anything today. It's just not my style. But I also think there's there is a lot of stocks that are just really washed out now.
Mm-hmm.
Yeah, I mean,
Christian, did you want to?
Yep. This
Yep,
is
go
going to
ahead.
be an interesting one just overall. Like I keep thinking about this. I don't have a trade on in Boeing. I've just been kind of watching this, and I've been thinking like over the last couple weeks, with everything else that's going on, which is very noisy, but is the worst behind Boeing at this point? I don't have the answer to that question, but there is a new CEO in there. So I mean, usually with a new CEO, it does take time, especially with everything that Boeing has been going through, but this is a really nice move. I do see some resistance at 173.20. We're also hesitating a little bit here, so short term, I would probably be ringing the register with knowing that there's some resistance right ahead around 173-ish. So, but nevertheless, nice move. There was also a kicker in here where they said that they announced a deal to sell part of its navigation business for about $10.6 billion. So I think that's also driving the stock a little bit too.
Good call.
I talked about this one yesterday.
Yes,
I don't know if it was on PreMarket Prep or in the STN room because I talk in both places, so I forget what I said where. But it's funny, I talk about this market that just prices in nothing. And that rumor broke on, I think it was Monday night. I'm losing track of days here. But yeah, it was Monday night. And it was coming from Bloomberg. And they said that they're going to sell this unit to Thomas Bravo. And I'm like, oh. Stock wasn't even trading up, just not even responding. There was no price or anything, but it was kind of just a rumor at that time. I was like, well, I'll buy Boeing, because, that's the rumor. And then the next morning it gets announced and the stock pops $5. And I was like, well, that was the easiest thing ever. I'm like, sometimes this market just prices in nothing and you just got to actually buy the rumor, sell the news. I mean, maybe we're at that case here too. Even to Christian's point on the overall macros, like Christian was talking about, the technicals looking pretty good yesterday. And then you get all this Trump headline stuff. It's like, the market kind of was anticipating something like this happening. So, I mean, this market is giving you lots of tells.
Yeah, absolutely. Let's keep going here.
Yeah. Let's do one more here, earnings review.
Yeah, go, Brent. Sorry.
So let's do Vertiv here. VRT. Company
Yes.
reported a beat. Company reported a beat 64 cents versus 62 cents. Sales also beating 2 billion. They gave some guidance. They gave Q2 earnings 77 to 85 cents. That was worse than expected. Analysts around 88 cents. Sales did come in. The sales guidance did come in a little better though. And Christian just sharing, they made a comment. They're taking mitigating actions to cut effects of tariff costs. Chat was mentioning this one. I know you guys like to watch this one a little bit just because it is in the realm of trading. Did anybody get any action on this one? Dennis, did you trade this one at all?
I did not trade this one, but I've been wanting to buy this stock for a while, and obviously now I just missed it. Like it. I wish I would have looked at it yesterday. It's in consolidation station here. Wasn't going down with the overall market, so the relative strength action the last couple of days was pretty darn good. This has been a washed out name to Jay's point in the chat here. I was in it once. I had a really good trade from like 90 to 104 or something on it. And I haven't been in it since. But this thing got down to $53, eh? I mean, some stuff just got really, really overdone to like as much as they get overdone to the upside. Maybe the end of 2025, this had no business being $155. It probably had no business coming all the way back, giving the entire big AI gain back and going down to 53. The home probably is more where it is now. That's 85 to 90, maybe even 100. So I think I'd be a buyer of dips on this, but I'm not chasing. Again, I cannot chase stocks that are up 18%. Not in 2025 because it just has not paid.
And I think the expectations were pretty low. The last 3 quarters, the stock did not react well to earnings. If you go back to last summer, that earnings report, the stock fell 13.6%. If you go back to October, the stock fell 3.7%. If you go back to February, the stocks fell about 10%. So I think that the what you're talking about is absolutely spot on. I think the expectations in the stock just really was washed out, because I think like the numbers, I'm just kind of looking through the sales and so forth. They're decent numbers, but they're not like knock your socks off type numbers. So yeah, I think you're right. I would not chase here either. I think that the stock was just basically washed out. And I think this would be a nice place to ring the register. And I do see some resistance up at 86.50.
Let's talk one more news item here before we bring in our guest, Sahak Manuelian. Some negative news out of Bristol Myers. They had an anti-schizophrenia psychotic drug, did not reach statistical significance. Stock was just at, it got smashed right after this news item. And I think just recently on one of my scanners, I saw that it was hitting new lows. Dennis, you were like kind of all over this one last night.
Yeah, because normally when I see Bristol Myers, Pfizer, and this was obviously in the STN room, go down a couple bucks, I'm like naturally on a drug. I'm like naturally I usually buy the dip. And I was like, oh, this is that schizophrenia drug, which is supposed to be a pretty good one for them. So this was like they had a lot of high hopes for this one. So when they come out and basically telling you it's not meeting its primary endpoint or whatever, and it's if it's like a smaller drug, Bristol Myers, Pfizer, Merck, they can shrug those off. They can be down like 1% because, we got, all kinds of trials. When it's one of their like ones that they're really hopeful for, the schizophrenia drug was, that's a big deal. So this thing really got crushed last night. I was like jaw dropping when this thing hit 45 last night. I'm like, they are just killing this thing. And I even said, I was like, if this gets silly town in the lower 40s, I'll probably pick it up. It never went down though. It bounced back up to 48. But Bristol Myers is one that I do have on my shopping list. I'd love to get it back in the low 40s. I already had a good swing trade on it from 42 to 60. So I would love to reload it at 42. I don't know if we can get that shot. Obviously not today. It's bounced back. But if it continues to leak over the course of the next few weeks, maybe you get the shot down there. I like it in the low 40s.
One more here. Let's do one more. I didn't think we were going to have time for this, but let's do one more. Aklo news last night. There was a CNBC report that the CEO, Sam Altman, was going to be stepping down Chair Sam Altman was going to be stepping down. And then, I don't know, about 20 minutes later, the company did come out with a press release confirming that they were going to be transitioning their chair. The company's CEO and co-founder is going to be taking over that role in addition to his roles of chair. This thing got smacked right away. I think it fell like 15%. and it's come all the way back here this morning. What'd you think about this one, Dennis?
Well, we talked about this one last night in the S10 room too, and you were digging a little bit deeper too. When the actual press release came, because we had the CNBC report drop first, and the stock went all the way down. Then in the press release, the news is there, but like you were saying, they were just wishing him goodbye and goodwill, and I mean they had seen the plan and was starting to stabilize. When the actual press release came out, it started to stabilize around 19 and started to get a bid, and we were even saying, I was like, it's forming some bids, and I'm like, if you wanted to take a shot, I said I would stop myself out under 19. It got 19, 20, 19, 30, was starting to go up, and then the Trump news happened, and then this thing just exploded higher, and it's all the way back to green. So I mean, it was definitely a beneficiary of the Trump news last night, and Trump commentary. But I mean, this was another buy the dip opportunity where buy the dip is just working right now, folks.
Well, my thought on this one was Sam Altman brought this thing as a SPAC, and I was like, in the realm of SPACs, don't the kind of like people that bring the SPAC usually just kind of separate from the company anyways? So I was looking at this press release. I'm like, I don't think this is totally unexpected, and it seemed like an amicable ending. So just kind of thinking, I guess, practically a little bit about it.
I think so too.
All right. Yeah. All right, folks, let's bring in our guests here. Let me find that intro. Here we go. Sahak Manuelian, he is Managing Director of Global Equity Trading at Wedbush. How is your morning? How's your week going, sir?
Good so far. Thanks for having me on the show, Brent.
No problem at all. No problem at all. You sent us over a couple really cool topic items to discuss. You kind of are, sort of leaning, at least earlier in the week, you were kind of leaning on some concerns over a potential recession. Is that right?
Yeah, for sure. We come into the week Monday morning. There was certainly a lot more recession fears out there, or talks of recession. We haven't seen very much new coming in Monday anyways. There wasn't very much new in terms of tariff negotiations. And then President Trump's comments really directed at J-Powell didn't sit well with investors. And so stocks came under some serious pressure on Monday. And then yesterday, stocks rallied. We had some pretty decent earnings results, albeit early. We're still seeing, again, this morning and from last night, whether it's healthcare and tech, home builders, industrials, we've actually seen some pretty decent results, or certainly better than feared results. And then last night after the close, President Trump with some positive remarks in terms of getting a deal done with China, or certainly being open to lowering the rates on tariffs with China and others. And then with Musk kind of saying he's going to come back to Tesla, et cetera. It's, things got kind of positive, and we come in this morning, we're up over 200 pips across the board within the Russell, the NASDAQ, and the S&P E-minis. So good start for futures this morning. We'll see how we land, but certainly a very, very volatile last couple of weeks here.
Mm-hmm. Sahak, I just want to, and Dennis Dick here, thank you for coming on the show here today. I just want to talk about, we are entering earnings season here. Obviously, this is, we're getting a few companies. We got Tesla last night. We had Netflix last week. But I mean, we're going to get into the heart of it. Thursday is going to be a big day with Google, Intel. We also are going to get next week coming, obviously, with the Microsofts, and the Apples, and the Amazons, and that's really the heart of it all. We've seen so far a reluctance to really give guidance, or this two scenarios from some smaller companies where they give like the tariff impacts, so they kind of got two scenarios, one with tariffs, one without tariffs. What do you think for, the Magnificent Seven as you're coming into like Google on Thursday night? Do you think there's still going to be that reluctance to give guidance here? Or do you think like maybe they're getting some clarity and maybe they can start to like, think about, actually providing us guidance? What are your thoughts are going into earnings season?
Dennis, I can't imagine too much clarity from these companies within the next week or two. But again, things are extremely fluid. We'll see how things shake out. But no, I would imagine we don't get too much clarity, and maybe these guys will probably get a pass for not giving clarity around guidance, and it's hard to really expect them to. Having said that, I would point to this Vertiv VRT this morning. They put up a good print, top and bottom. Investors look at this stock as a proxy for data center construction, and the fact that they put up a good print, they actually took full year guidance up, and they're talking about robust demand trends. And so I thought that's a big positive for the whole AI complex. I don't know if we see more themes like this or more statements like this from some of the Mag 7 folks, but we're watching. We'll see what comes out. But overall, I thought this was a pretty decent print from Vertiv this morning.
Question for you, and thanks for being on the show. Very much so. I was wondering if you could talk about a little bit about flows in terms of what you guys are seeing. Like we've heard a lot about hedge funds which have really unloaded a lot of their exposure. My question is, are some of these institutions, like overall, it doesn't have to just be institutions, but are you seeing anything in terms of are things washed out enough where now like buy the dippers are starting to say like this is a good opportunity, or do you think that folks are still kind of unwinding or saying, hey, I'm shorting this market? Just wondering if you could provide any like clarity about what you're seeing in terms of like flows and a little bit of direction.
Yeah, to the latter part of what you said, I'm more in the camp, sitting here and watching flows, or from our vantage and again, all the business we're doing here on the desk is institutional business. The amount of deleveraging and degrossing we saw over the past 2.5, 3 weeks has been phenomenal. And so books have really been taken down. And so there's certainly, I was going to say to the second part of what you said, there's certainly this washed out effect. And it certainly feels that way, especially trading the last 2 or 3 sessions. I would suggest that starting last week, especially within small and mid cap names, we've seen more buying. We've seen real buying, and not just the buy to cover bid that had been out there, but there's actually been investors coming in and going through stuff and looking at just really beaten up or overly beaten stocks and trying to pick some spots. But on our desk here, we've certainly seen some real buying, which I think bodes well. And a lot of it is coming within the small and mid caps. But nobody owns these small caps anymore, by the way. They've taken the gross down so much on small caps. You see the price action yesterday. One's really able to bully these things around just because the supply is waning, and sellers, if they're around, they're becoming much more price sensitive. But flows have certainly had a tilt to the buy side. Even on Monday when things were getting hit, we were still net better to buy on the desk.
Well, Sahak, let's take this to the defensive stocks. Oh, sorry. Go ahead, Christian.
Well, I was just going to ask, sorry, jumping in here, but it was very interesting price action on Monday too with the VIX. Like the VIX wasn't screaming higher. Like it to your point, I think like the VIX around what level are you watching in the VIX? Do you think is a psychological level? But I think that was really telling in terms of the price action on Monday. Like I was looking for the VIX to go higher, and it kind of trailed off at the end of the day.
Yeah, we watch the VIX very closely. I put out a technical piece every Tuesday, actually. And just a couple of weeks ago, the VIX was above 40. We had highlighted the VIX at 40, or it was just above 40, and how historically that's just a good time to buy stocks. And we saw the VIX break down most recently in I guess, yesterday's Tech Tuesday piece here. We talked about VIX at 30, and so this morning I think we're maybe at 27, 28, but right there. I think the VIX at 30 should probably be a little bit sticky. It's certainly a level that we're watching. I think it probably becomes somewhat sticky around the 30 level, because in the environment right now, I have to imagine investors still want 1 to 3 month protection. And so I don't know if we get this big downdraft back in the VIX, but my presumption is that it probably hangs around these levels and it doesn't just come fading back in. That's our short term on the VIX anyways. And then just along with the VIX, I would have to mention in the same breath, high yield credit spreads. We've seen this, we've seen this narrowing, certainly yesterday, narrowing of high yield credit spreads. And that was another nice tailwind for equities.
I want to just move into the defensive names here because obviously, when the markets are in rough shape and the equities are going down, some defensive names. We know gold obviously has been rallying substantially here, but I was just thinking, the other defensive names like consumer staples are not far from 52-week highs. Utilities are not far from 52-week highs. Berkshire Hathaway, the ultimate defensive name with 35% cash, is not far from a 52-week high. I mean, with so many stocks down 20-30% from their highs, is this, trade come, if the markets start to get their footing, do this trade go the other way, or does money just keep piling into these defensive names because of all the uncertainty?
Yeah, I think that's a great question, Dennis. If we just take a step back, when we started the year, we really saw from the onset the sector rotation favoring defensives. And within the defensives, you mentioned consumer staples and you mentioned utilities. I would just remind folks that healthcare was actually there up until a week and a half ago. Healthcare was actually up 6-7% year to date for the first, I think, 5 or 6 weeks of the year. Just recently, healthcare has really gotten punched in the nose here. And so I think that given the moves that we've seen over the past 2 years within the consumer discretionary and within the tech and the Mag 7, this lower breadth of stocks that really moved the markets higher in 23 and 24, I think that the whole sector rotation into more defensive type plays has legs here. And so maybe in the short term, meaning today, tomorrow, and maybe next week, we start to see some of these cyclicals actually bounce from pretty depressed levels. But I still think that healthcare has much more upside here. I also still like the other defensives like the staples and utilities that you mentioned. But yeah, if you just take a look at the S&P versus bonds, you're seeing underperformance there. S&P against gold, underperformance there. S&P against the consumer staples, underperformance there. So certainly a tilt towards not just defensives, but I think whatever wasn't working the last 2 years, I think that trade certainly has legs here. And I know everybody needs small caps. I think small caps have some legs too. I think we'll see some relative performance within some of these small and mid cap stocks versus their larger cap peers.
One of the big themes that both Christian and Dennis have been highlighting on the show this entire year is the chop. 2025 is the year of chop. How has your desk been handling these kind of extreme moves, ups and downs so far?
Yeah, I mean, especially the last 2 to 3 weeks. Well, I guess since the whole tariffs came in that Tuesday evening, the volatility and the chop intraday has been quite wild. Look, quite frankly, it's been good for business. So I will always take the volatility and I will always take the chop because it's been good for business. When things are just going straight up or conversely straight down, flows and business on the desk here always slows down. But when we've had the kind of volatility that we've seen over the last 2 and 3 weeks, it's always good for it's usually good for business. And it certainly has been, but it's not acute to us. I think desks across the street are actually much busier and have been having some pretty decent flows. So we certainly welcome it, but it makes for some pretty hectic intraday sessions.
Sahak, we've only been on here for like 10 minutes. It's crazy. You've just given us a ton of info to digest. We're going to wrap it here, but really appreciate you coming on and hope you have a good rest of your week, sir.
My pleasure. Thank you for having me on today, guys.
Thanks, Sahak.
No problem. Sahak Manuelian, Managing Director of Global Equity Trading at Wedbush. All righty, folks. A lot of info so far here on pre-market prep. We've got through a ton. We do
just have
a couple of
jump in. real quick. Can we just, if I could just show
What's
my
going on?
charts here just for a second.
Yeah, I
I know
got
we've
you.
got a
Yeah, yeah.
number of things to talk about, but I think the small caps mention is really interesting. I talked about this in the morning, just going through what the indices are doing, but I really find it interesting. If you look at SPY, for example, notice like the big move on 4.9, right? I think this is going to be very interesting to see if price can get above that April 9th high. That's when we had the big thrust up. We're not there yet for SPY. We're not there yet for Qs. But take a look at what IWM is doing. Like, I think that he's absolutely right with seeing like some investors start to kind of pick through some of the small caps, because this is now trying to get above those April 9th highs. That's not what the other indices are doing. I was also looking at this yesterday with the micro caps too. Again, Mike, the smallest companies out there, that's also trying to get through the April 9th highs. It's very different to me to see that. So I just wanted to jump in with that. Let's go back to the news, but I find that very interesting. Dennis, I don't know if
Yeah.
there's anything that you want to add here too before we move on.
Yeah. Well, yeah, I mean, small caps are starting to show a little bit of life, and obviously they're very sensitive. Like we've talked about this before, the small caps are very sensitive to interest rates changes here. As the TLT has been coming down, I think small caps get hit a little bit harder probably than some of your tech stocks, even for the simple reason is that they're not as interest rate sensitive. I mean, if we can start getting a little bit more confidence here that interest rates are coming down sooner than later, and if the TLT can start to find its footing, I think there is a place here for small caps as well. I do have some of the IWM in my long-term portfolio, which has been an epic disaster, by the way. I mean, small caps, just for the performance of them over the course of the last 5 years, has been nothing. Like IWM is up 0 in 4 years, where obviously the QQQ in the last 4 years has went up about 30%, 40%. So it's been actually 50%. So it's been an underperformer. I mean, I think there is a place. The valuations are lower there, but to Jim Tassoni's point, who's been on a lot of times, half those companies in the IWM don't make money. So you're relying on the upper half of them to really pull you, and maybe that's always the way with small cap investing. It's always just a few winners that make your year. But I think there's a place for small caps here. I think they're just going to be very sensitive to Fed speak going forward as we get more inflation data in, and that's the wild card. I mean, we don't know if these tariffs are going to be inflation. We don't even know the numbers of the tariffs. Like, we don't know, he's saying it's going to be less in China now. So we don't even know where the tariff numbers are going to sit to then try to extrapolate what that means for inflation. So there's still a lot of uncertainty in small caps.
Just real quick, want to preview a couple of the earnings, and then we're going to jump back to one more earning review. We get IBM tonight. We get Chipotle tonight. Tomorrow, we're going to get Intel, Pepsi, Caterpillar, Southwest Air, and also American Air. Just wanted to make sure those were on everyone's radar. Let's jump back here to one more earnings report. GE Vernova, its ticker GEV. They reported a beat on both the top and bottom lines, and reassuringly, they did reaffirm their fiscal year 25 sales guidance. Christian, I know this is one that you had on your radar, I think yesterday, but definitely today, right?
Yeah, I mean, certainly one to watch. I mean, it's such it's a very influential name in this group, in the whole like power generation group. And I think this will be very interesting if these names start to kind of come up here a little bit. If you look at this daily chart, like I was looking at this prior to earnings, I did not put a trade on, but you've got a really nice move here, and like look at how well GEV is kind of held up versus the overall market. Here's the 200-day moving average. We know that prices for the overall market are still below the 200-day moving average, not for GEV. And I think when you go through charts here, you want to make note of which groups or which areas of the market have been somewhat resilient. And I would put GEV and a couple of the other power generation names in that. VRT, not so much. Not VRT. I get these names confused all the time. But VST is another name to watch. NRG, yeah. NRG looks really good too, I think, from a technical standpoint, in regards that it's just been kind of jumping around. CEG is another one too, that's fallen a little bit more by the wayside. But yeah, very strong report by GEV. Should be a catalyst for this group.
I think this market has forgotten about AI to a certain extent. It's so focused on Trump and tariffs and, the Fed, inflation, potential. Like, it's just lost its way of what the theme of 2024 was. I think when the tariff cloud subsides, and it may do it sooner than later. If he starts doing deals and the numbers are way lower than we thought, we're going to get some tariffs. But if it's sitting down there at 10%, it's not going to be a game changer for a lot of companies here. I think we need to start focusing on the theme of 2024. I think that AI theme comes back. Like AI is not just it's the 2024 thing. We'll be talking about something else in 2025, 2026, 2027. No, AI is going to change the world. I firmly believe that. The valuations for some of these companies when we got towards the end of 2024, 2025 just got too excessive. It was an AI bubble that needed to pop. That bubble has been popped in a lot of these names. And now you start coming back and saying, hey, let's look through the rubble, because some of these stocks, like Vertiv, for instance, when it got down to 53, and I didn't even notice it got down to 53, is probably, a good opportunity to get in a good AI name at a really reasonable valuation. I mean, there's a bunch of other names, and we can go through the power generators like you just did. Obviously Constellation Energy, VST. These have all been beaten up a lot too. GE Vernova was a $447 stock, got down to $250, basically got cut in half. So I mean, I do think that this Trump tariffs have given us the opportunity to get in a lot of names at more reasonable valuations. So even Nvidia itself, under $100 again after being over 150. I mean, you're trading like 27 or 28 times forward earnings. Amazon trading 26 or 25 times forward earnings. Going to be a big player here in AI. There's no doubt about it. Somebody was saying Amazon actually might benefit the most from physical AI in the form of like eventually humanoids doing deliveries, humanoids working in these factories, packaging and doing everything else. You could see it. You could see that potential there 3 to 5 years down the road. So I think from my perspective is I still want to be fully invested in AI, and I think on dips I'm looking for those names to maybe get a hold of here, like a Micron, completely washed out. I picked up that just a few days ago, and then you can look like a Marvell, been a completely forgotten MRVL. It's down here at $50 here now, or 54 this morning because everything's rallying this morning. It was $120 at the beginning of the year. So, I mean, there is some washed out names and some opportunities for, student investors here to start maybe thinking about buying these dips.
Dennis, you had said previously, maybe a month ago, that you thought Alibaba was one of the most undervalued AI plays. How are you feeling about that statement now?
Yeah, it is. But the issue I have with Alibaba is I don't know where this tariff war with China is going.
Sure,
I know
of course.
Trump said a lot of cool stuff yesterday and saying, yeah, the tariffs on China will be much lower. Yeah, they're going to be 140%. So we know that. There's still, this East versus West. The ADRs are listed here. I didn't like those rumors that they might delist the ADRs. That scared the living hell out of me, to be honest, because I own Alibaba,
absolutely.
I own Baidu, I own JD as ADRs. And I'm like, I don't even know what that means. If you delist these ADRs, like now where, so now I got to go try to trade out of them on the pinks. Like what's going on, to even talk about that. So that scares me in that aspect. If Baba was over in the US, I've said this before, if Alibaba was in the US, it'd probably be a $300 stock. If Baidu was over in the US, it'd probably be a $250 stock. It's not, though. So there's the uncertainty of China. There's always the uncertainty of, geopolitical risk, but there's always the uncertainty of just China harpooning their own companies, which they've done in the past, too. The government comes in, and obviously, where'd Jack Ma go? He's missing for 6 months. I mean, this is just, the reality. But from just a earnings perspective, earnings power, if you believe the numbers, again, GAAP accounting, is not over there. So you know how much you can believe. But if you believe the numbers from Baba, Baidu, these companies are dirt cheap. But I don't know that, risk here now as the tariff war has escalated. There is that risk, that you could even delist these things if it gets really ugly. So that's the risk of buying these names.
Got about 5 or 6 minutes left here, guys. Want to go to a couple of trades that each of you, coincidentally, I don't think you guys planned this, put on in the retail brokerage space. Christian, you got some action on Robinhood, and Dennis, you got into Webull. Christian, why don't you start us out? What do you like here in Robinhood? What were you using this for?
I'm on mute. Oh, sorry about that.
All good.
I was noticing the move, obviously, what happened with Bitcoin yesterday. So I was looking for, and we had a great guest on yesterday, and we were talking about the move in Bitcoin with Mish, and I really liked the move that was happening, and I started to kind of look for not only going long Bitcoin, which I did yesterday, but also in some of the derivative plays. And we looked at MSTR a little bit yesterday, which made a nice move. I like the move that was happening in the financials early on yesterday, and I just thought, hey, this Robinhood has been kind of left for dead a little bit. I just
Yeah.
think that Robinhood is going to be a good company, like position wise, so both fundamentally, and it's also had, it's gone down enough for me to kind of look at it and say, hey, this name looks interesting here. So I thought it had the wind at its back with the move in Bitcoin, and also with
Sure.
the financials doing pretty well yesterday. So trade worked out pretty well.
Are you still in it? You intending to hold, or are you going to sell into the strength?
I will be out of it. I sold a little bit on the initial bump last night, and I will
Yeah.
get rid of it because it has reached my first price target here of 45. The next
Yeah.
thing up
Awesome.
I see is 47. So I'll be out of like 80% of this position by the
You're
time
selling the
Yeah.
rip still too.
I
Nice
absolutely am.
trade.
Yes, especially in some
Yeah.
of these momentum names too. I don't mind, holding on to the last piece and trying to reach for something higher. But I'm still into what you discussed earlier, Dennis. I'm still very much a bit in the sell the rip camp.
I am too, and I bought Webull yesterday here, and it's up 18% this morning, and I'm probably going to be selling it this morning. I mean, this is
Yeah.
just, when you get these 18% moves here overnight, and I'm not up 18%. I bought it at 25, so I was down a little bit, and actually, but that's still 12, 13% move overnight. I still think we're in the take the money and run. I've called it the Steve Miller Band market. I think we're still in that market. It's been working really well for me. I'm having this month so far has been my best month since 2020. So I don't know. Obviously, things can happen and things can change, but so far so good. I mean, it's just been an incredible month for trading purposes.
Certainly. Folks, we're going to wrap it up here in just a few minutes. Wanted to give a quick preview at 10 a.m. in STN in the Stock Trader Network. That's stocktradernetwork.com. We're going to be having on Mark Chaikin. He'll go over some of his power gauge stocks. I know the audience always loves when Mark pulls up the power gauge and kind of walks us through a few stocks in the chat. So if you do want to tune into that, please go to Stock Trader Network. We have programming from 9 to 10. Christian's Corner at 2 p.m., 2 to 2:30 p.m., looking over some of the things that he's focused on. And then later at 3:30 till probably around 5 or so, Dennis and I come on and get you set up for the close, and we take you through the close. And as we are in earnings season, it is going to be probably a pretty busy after hour session. So check it out, folks. Still a couple minutes here. Want to get your guys' final thoughts for the day? Dennis, you want to go
Yeah,
first?
I'm going to
Or
jump in
else?
here. I'm going
Sure.
to jump in here right now because I'm always one, like when this S&Ps are trading up 130 handles, let's lift up the hood and let's take a look. I'm going to say something here that's going to blow your mind, but I don't think SPY's up enough.
Woo,
like,
Dennis!
What? The
Dennis.
stocks are up so much here, man. You're going to have some stocks go in red to make up for the difference because we got Tesla up 7.7%, Apple up 3.49%. Microsoft is like the lowest one almost, Microsoft and Google. They're only up 2.7%, which is up as much as SPY. Then you have Meta trading up 5.44%, Amazon up 5.55%, ARK's up 5.16%, stocks like Shopify up 7%. Affirm up 8%, Upstart up 8%. Now those are smaller. Intel's up 5.6%. But I just look across the board, banks are all up 3%. I'm like, there's like all the major names are up more than 2.59%. Now again, we're going to see rotation. Expect the consumer staples to go red. Expect, healthcare XLV I know is trading up 1.21% right now. I've just recently shorted XLV here in the pre-market because I think the money is going to come out of that and go into other stocks. I don't see much trading higher. I got Johnson & Johnson in the red, Merck in the red, Bristol Myers in the red. I don't think XLV has any business being up 1.21% unless we get a major reversal. Now, again, everything can change when we get to the open, but it feels like actually SPY may not be up enough for some of these major stocks here.
Wow, that's interesting. I am watching. I see resistance that I have for SPY, which is up about another 0.4 of a percentage point. So a technical level for SPY is 543.25. I just wanted, I mean, there's so many stocks that are moving, and it's a great point. But I also think that there's a couple of really interesting software moves going on. Look at Pega. Pega is had earnings. It's up to $88. It's a $20 move for a $68 stock. I'm going to be looking at some of these names that are also going to be reporting after earnings, because also we haven't even covered SAP, which is a European name. I am long this name in a longer term account. This is my trend trading account. So very nice move. I'm going to be looking at ServiceNow after. I think that this has a chance to kind of make a decent move. I like the earnings history on ServiceNow. If you look, the stock really has been pretty beaten up. It got really beaten up last earnings. So what can earnings do? Possibly turn stocks around. So I think that there will be some more opportunities in some of these names that are going to be reporting this week.
Love to hear it, guys. Love the perspective. A good show here on Pre-Market Prep. We're going to move over to the STN room, have some programming until 10 a.m. Eastern time. Thanks for joining today, folks. Good session. Good luck out there, and we'll see you tomorrow.